Ladies and gentlemen, welcome back to the channel. I hope you guys are having a fantastic day. Now, here in this video, we're going to be going over everything you need to know about our markets and what's happening today. AMC stock is down about 2.5%, which in the grand scope of things is pretty impressive. Tesla down 7%, Apple down 3.5%, Google down almost 4% today. Now, I'll just tell you what this is, what's happening in our markets right now. It's simple. FOMO into AI. Take cash from other stocks, put that cash into AI stocks. That's what's going on. That's the simple kind of second grade explanation I can give you. People are selling stocks like AMC. They're selling other stocks, and they're buying NVIDIA. They're buying SMCI. They're buying all of these other AI stocks, and they're chasing. This is called FOMO. You've seen it before. It's FOMO. It never ends well. Apple and Google down big today is really showing you how the FOMO is capturing this market, which is unlike anything you have seen in a very, very long time. With that being said, tomorrow is going to be a very important day for our markets. We did get some comments from Fed Bostic as well that did shake up the markets, at least momentarily, in the day-to-day. Kind of the same thing that we've heard, but it does kind of show that maybe the Fed's not going to cut as soon or as much as, again, the markets are expecting. So we're going to get into all of this. We're going to look at AMC stock, what the data is like today, and everything you need to know about today and tomorrow. Hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comment section. So, first and foremost, that's the kind of the gist of what's going on today. We're really not getting anything for like bad news. We're not getting any negative headlines for the most part. There's nothing. It's an AI craze. It's FOMO. You got to stay away from AI stocks right now. Now, that's not financial advice. Maybe you'll miss out on temporary money. But when this thing pops, when this bubble pops, it is going to be bad. Very, very bad. Okay. Now, when the bubble does pop, that's going to move money into other areas of the markets, right? Just like you're seeing today with money leaving areas like AMC, like a Tesla, like an Apple, like a Google, like most of your other stocks today. Once that bubble bursts in AI, then that money's going to go into other areas of the market. Sure, is that going to bring down the markets? Of course. Could that crash the markets? Of course, when that happens. But you will see a broadening out of our markets at some point. Question really is, when does that happen? And I don't have the answer to that, but I do have a little bit of a suggestion, I guess. Broadcom, AVGO is the ticker symbol. They report earnings Thursday and after hours. On any metric you look at, this stock is extremely overvalued. Let's just say that. The stock has went from, midpoint 2023, around May-ish, $600 per share. The stock's $1,400 per share right now. SMCI, NVIDIA, all of these stocks are very overvalued. Now, valuation does not do much for a stock when it's momentum based, right? When there's this much momentum out there, just being overvalued is not going to push down a stock. Let's be honest about that. But what it will or can do is when a stock reports earnings, it puts a lot more pressure on that stock to do exceptionally well. If there is anything that is not exceptional, stand out, knock your socks off, the stock is subject to see a big haircut. Now, Broadcom reports earnings on Thursday. Now, Broadcom typically has really good earnings, but with the stock trading now at all-time highs, even rallying 7.5% on Friday, another 0.5% today, the bar is very high. And you've priced in a lot of good news. Now, I don't know what happens between now and Thursday. Is it possible that Broadcom sells off for a couple days? AI stocks kind of sell off tomorrow, sell off the day after, and then boom, you're in a position like you were with NVIDIA, where NVIDIA fell almost 10% heading into their earnings. And then Look at what Nvidia is doing today. Holy guacamole, that stock has no chill at all. It's literally driving down Apple, it's driving down Google, it's driving down everything with this parabolic short squeeze like rally that you're seeing in the stock. I mean, on Friday it was up 4%. Today it's up 5%. The chase in Nvidia is ridiculous. Okay? It doesn't even make sense anymore, right? So inevitably, these stocks will come down, and that will be very bullish for AMC. And that's maybe when we could expect a larger move higher for AMC and even a broadening out of our markets. Now, we did hear from Fed Bostic today. Fed Bostic said today, I do not have a base case for when it might be appropriate to reduce the pace of the balance sheet decline. He also says services inflation remains higher and it may take longer for adjustments to occur. I am hopeful that the Fed can continue the current pace of balance sheet drawdown as long as possible, as long as overnight reverse repo is active at the significant volume balance sheet can continue to decline. That's kind of worded strange. It says businesses are not distressed and are ready to invest and hire when the time is right. Fed Bostic says pent-up exuberance in the economy is an upside risk to inflation that requires scrutiny. He also says the risks of inflation and employment have balanced out. Businesses say there is stress among lower-income consumers, and it is expanding up the distribution. Fed Bostic says, I am not seeing degradation of the job market in any meaningful way. The Fed has some time to be sure inflation returns to target. Inflation is still widespread, with prices for more than the unusual share of items increasing above 5%. Trimmed mean is stuck at 2.6%. Return to price stability without significant economic pain would be a resounding success for the Fed. Fed Bostic says January hiring, including the breadth of hiring, is a fresh sign of strength for the labor market. He also says inflation is on track to slowly return to the 2% target, but it is too early to claim victory. So you kind of get the gist of what he's saying. He's saying, things are hot out there. The labor market's doing well. Who knows what comes next with inflation, but the Fed's not in any rush at all to start lowering rates. He says, I need to see more progress and gain confidence on disinflation before reducing the policy interest rate. So need to see more inflation reports that show broad disinflation. He says, I still expect 2 quarter percentage point cuts this year. I would not anticipate that cuts, when they start, would be back to back, but it will depend on the response. The strength of the economy and the job market means the Fed has the luxury of proceeding without urgency. So we might not get cuts for a while here. This this could be a foreshadow for what to expect, what we can expect from Powell on Wednesday. He also says a soft landing is hardly assured given the level of uncertainty. So really throwing some cold water on when the Fed is going to start reducing rates, how much the Fed is going to start reducing rates by. And that's something that did kind of knee-jerk the markets, at least momentarily today. But again, it's the craze around AI that is, really dominating everything. I mean, the chasing, the FOMO is so real, it's ridiculous. A lot of this, unfortunately, is probably quant trades from algorithms and from computers, and not just people buying the stock. So I think that's an interesting point, because if people are buying the stock, maybe there's more support there. But if you have quants that are just buying this sector of the markets, imagine it like this. Imagine if quants are doing 90% of the volume and real people are doing 10% of the volume. Is that a real rally? Is that something that is sustainable? No. So those 10% of people that may make up 10% of the volume that you're seeing in Nvidia or some of these other stocks, they're going to be very disappointed when the rug comes out from under them and they fall on their but actually their tailbone. Actually, I know somebody that fell on their tailbone and broke their damn tailbone. You don't want to break your tailbone. I hear it sucks and you can't sit right. You don't want to break your tailbone and not be able to sit right. You gotta stay away from these AI stocks. There is no money to be made at this point. Could they go higher? Of course, but the risk to reward is absurdly terrible. Terrible. It's like everyone woke up one day and said, yeah, SMCI is not a $100 stock. It's a $1,400 stock or whatever it's trading at right now, $1,200 stock. NVIDIA is not a $300 stock. It's a $900 stock. Like, okay, you got to be cautious when the markets that get this greedy and start chasing this hard. With that being said, again, we are going to have some earnings coming out this week that could kind of derail some of the AI trade. That is Broadcom and that is Marvel. These are your two big AI stocks that, you know, could move the markets around quite a bit. Are they going to? I don't know. Maybe they do have bad earnings. Maybe they have good earnings. I don't know. I think it depends on kind of what happens leading into those earnings as well. You know, if we do get a sell-off like we got with NVIDIA heading into the earnings, maybe these stocks rally after. If we just rally into the earnings, you probably sell off after. And I think it's, you know, so simple. It's stupid. I don't think a lot of people like simple explanations like that, but that's the simple explanation. Today in after hours, the biggest earnings you will have is GitLab. Oh my gosh, the options are pricing at like 20+% for that stock. The options are stupid expensive. Stay away from that with a 10-foot pole if you guys can. You need like a 40% move to even make any kind of money, and it's not even going to be a large amount of money. There's like no cheap options at all. Tomorrow morning, you will also get NEO, Target, Ferguson, and some other lesser known names. Tuesday and after hours, CrowdStrike, ChargePoint, Ross, Nordstrom, Box, Bionano, Genomics, and that's pretty much it. Wednesday pre-market, JD.com, Abercrombie & Fitch, Foot Locker, EVgo, Campbell's, and that's it. Wednesday and after hours, really nothing too notable. Victoria's Secret and Honest, if those are your kind of companies. Thursday pre-market, Kroger, Big Lots, Burlington, American Eagle Outfitters, Billy Buy, PaySafe, and then Thursday again in after hours, Broadcom. Costco could be a big one as well. Marvell, MongoDB, DocuSign, Samsara, Petrobras, Gap, and Runway are going to be reporting earnings as well. Tomorrow, you will be getting some data coming out that will be important, especially for kind of what the Fed was talking about today, Fed Bostic. It's ISM Services PMI. So we're actually expecting a decline from 53.4 to 52.5. If you don't get a decline and you actually go higher from last month, that's going to be another kind of, you know, gut punch to the bulls of the disinflation thesis, because ISM Services PMI, if that comes in hot, then that's going to mean, you know, the inflation story is maybe not getting better as quickly as we would have hoped, and likely gives the market some downside there. Now, coming tomorrow, you will also get factory orders month over month, expecting -3% there. Last month was positive 0.2% month over month. You will get Fed bar that speaks at noon and 12:30. ISM business activity, ISM services employment, ISM services new orders, and ISM services prices. Prices are likely to be very important. Last month you spiked to 64. I mean, look at this. Look at this chart. It's hard to claim disinflation when ISM services prices just went up that much. Question is, does it go up again? Okay. Expectations are for 63. Last month was 64. So anything under 64 is going to be good news. If you come in higher than 64, that's bad. And if there's anything that does pull down the markets tomorrow, it's probably the ISM services prices. And that could be a very big deal. With that being said, let's briefly run through the data here today for AMC stock and then let you guys get on your way. From hedge funds and institutions today, you have seen 3 options trades in AMC, totaling $52.35 thousand, the positive order value of 70%. Now, you do have short interest that is continuing to climb at 12.68%, $144.93 million currently in short positions. In AMC stock, days to cover 2.02, 33.24 million shares that are currently sold short, shares out on loan 42.74 million, cost to borrow 1.08%, utilization of 63.65%, and a short score of 66.85 out of 100. You do have cost to borrow max at about 8.6%, so there's actually a decent amount of demand out there to short AMC stock, which is different. I mean, we're usually not seeing that much demand to short AMC, but you are definitely seeing that now. So there is that. So keep in mind, AMC stock is getting a little bit more squeezy every single day, but it is definitely a slow and steady kind of process for that. You do have the percent of stocks above their 50-day moving average, currently at 56.23%, rising steadily. You're up about 1% today, but today's a pretty rough day for most of the markets, right? Today's not exactly a fantastic day out there. Unless you're in your AI stocks, then you are loving this, at least temporarily. Can you take a victory lap? But you got to be careful here. I think now would be a fantastic time to take profits if you are in any of these high-flying, notable AI stocks. I think March 12th is going to be a big day for AI stocks, as I have talked about here on this channel. You know, March 12th is the ARM lockup period. SoftBank's going to sell a ton of ARM, and it's going to bring down the stock. If they don't, I would be very, very surprised. For option activity, like I said, this week is pretty much a dud. There's not too much actually going on. Next week's when you have a lot more action. You got about 4,000 calls currently in the money, 238,000 calls out the money. In the money puts at about 30,000. Out the money puts at about 108,000. So decent amount of option activity, especially for next week. But for this week, not really anything that's notable there. So there is that. 10-year Treasury yields today are up about 4 basis points, which is not great, but I mean, that could be a reason why some of your smaller and mid-cap names are selling off. 10 2-year yield curve inversion is inverted 35 basis points. It's just been getting more inverted, which is actually good. That's actually a bullish thing for our markets, because when you go positive, that's when you're likely heading into a recession. So not quite there yet. And again, for AMC stock, I'm expecting a move down to about $4 this week, or a move to about that 50-day moving average at $4.75 per share. I don't know if we get above that 50-day moving average unless AI stocks come down, unless you see a really, dovish Fed Jerome Powell or really good data tomorrow. I'm not exactly sure what's going to happen, but it doesn't seem that likely that AMC breaks out to the upside from here. Is it possible? Of course, it just doesn't seem that likely. Let me know what you guys think about this information down below in the comment section. The MACD is now almost positive, so we're getting close to being positive. If we do go positive, that's going to be great. But who knows, right? Who knows if we're going to go positive? That's going to be a big level, because if we do, that could bring more traders into AMC stock. The RSI at 43.73 as well, pretty neutral overall, but definitely starting to edge down lower there. So let me know what you think about all of this information down below in the comment section. What is your opinion for tomorrow's data? Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.